Hi, I'm Lisa Leiter. In Chicago Business Today, the local economic outlook. Crain's talk with several Chicago area employers who are optimistic about business in 2011. Some are hiring again and investing money in new equipment as new orders rise, like Navistar International, which is planning a 5 to 10% increase in capital spending.
What we would expect to happen in 2011 is about a 25% improvement in goods bought, trucks bought, versus 2010. So somewhat significant number. Still depressed, but much better.
Houston attributes much of the increase to a new tax break that allows businesses to write off 100% of spending on equipment and machinery this year instead of depreciating it over years. And while there is some uncertainty still, he says he's seeing more signs of confidence in the economic recovery.
If manufacturers get better, that spirals down into everything else. It spirals into the communities, it spirals into the services that the surrounding areas provide. There's still some uncertainty about the longevity, the sustainability of the economy. So that's going to drag us down just a little bit.
Moody's Analytics predicts that the Chicago area economy will expand 2.6% this year, following 3.1% growth in 2010. That lags the forecast for the national economy. The factory sector will lead the way. According to a nationwide survey of manufacturers by Chicago-based Grant Thornton, 81% are optimistic about their business prospects in the next 6 months, and nearly half plan to pick up the pace of hiring. Overall, local employment will edge up 0.9% in 2011, or 14,341 jobs, just barely better than last year. The jobless rate, a lagging indicator, is expected to swell to 10.7% by the end of this year from 8.9% in November 2010 as more people re-enter the workforce.
We will see some hiring, but more importantly, the profits that go back into the region. That's really important to us. Everybody forgets. They look at Chicago, and we lost a lot of manufacturing in the 1980s. And frankly, in employment ways, we never gained it back. But we still produce a lot. And as the manufacturing sector was shedding floor jobs, they also were outsourcing more. Not abroad necessarily. They were outsourcing to accountants in the Midwest. And all those business services that they outsourced are coming back now. And that's where you're beginning to see the hiring first.
Local staffing firm LaSalle Network says demand for accounting and corporate finance jobs leaped 35% in the past year, a sign that employers foresee an improvement in business. One sector, though, still holding back the recovery, real estate, which is not expected to gain much ground this year. Research firm Tracy Cross and Associates predicts that just over 4,000 new homes will be sold in 2011, and while that's up 26% from last year, it's a fraction of the 2005 peak.
The housing market actually, is in the risk of hitting a double dip. And the backlog of foreclosures, which is fairly significant, has forced another leg down in home values, which of course causes hesitation. It's the ultimate fear of deflation. Buyers and sellers alike don't want to sell into a market where the price of their asset is going to fall.
A shortage of buyers and a glut of bank-owned and foreclosed properties on the market will continue to hold down home values. Single-family home prices dropped 6.5% in October from a year ago. Chicago's decline was one of the biggest among those tracked by the Standard & Poor's Case-Shiller Index. And that's this edition of Chicago Business Today. For more on this story, be sure to check out this week's print edition of Crain's and chicagobusiness.com. Thanks for watching. We'll see you tomorrow.